Are they arresting developers now, David? Hey, Bankless Nation. It is the third Friday of August. Hope you're doing well. It is time for the weekly roll-up. That's what we're about to do, David. Every Friday, coming at you. You're in a different place. Are you going like mountain climbing or something this week?
No, not mountain climbing. I'm just gonna go climb a mountain, which is meaningfully different.
Oh, okay.
Me and the four Alfalfa boys are right after this. We're about to go to the Olympics in Washington. So gonna go have a little cabin weekend, and then we're gonna go to the High Divide Trail.
This is
20 miles.
This is different. There's a distinction between mountain climbing and climbing a mountain, which is like you're not using your hands. Is that the distinction?
We are just walking. We are just walking a lot.
Man, I've been getting into the mountain climbing documentary scene. There's quite a free
inspirational
solo.
stuff.
You
right?
see that?
Yeah. Mm-hmm.
Alpinist.
Yeah.
Dawn
Wall. Have you seen Dawn Wall?
No. Is that the next one?
Dawn Wall's better than Free Solo.
All right. Does the guy die in the end though?
No,
because I can't do that.
No, he does
can't
not.
do that again.
Well,
all right.
In one of these three movies, he does, but not in the one I just mentioned.
You're right. No spoilies, guys. Sometimes it happens. It's a dangerous freaking sport, which is why I'm glad you are climbing a mountain rather than mountain climbing, because this podcast would be pretty boring without my co-host. Just me talking.
I have done ice. Since we're on the topic, I have done ice climbing in the past, and let me tell you,
I know, and that worried me. But with all strapped in, you're not free solo.
Super strapped in. Absolutely, I am not a lunatic.
But still, you're edging ice climbing is not
adrenaline,
not a team sport. Anyway, okay, some adrenaline in crypto this week as well.
Certainly,
the Tornado Cash saga continues. Are they arresting developers now, David?
The answer is yes. Get into that. Yeah, there's an arrested developer.
Yeah, arrested. That's crazy. That's a big step up. And the question on the back of that is Ethereum really censorship resistant? We're going to get into that. What else are we covering, David?
We're also covering the bad boys. Contagion topics are back. We got Three Arrows Capital on the front page of the New York Magazine. So we're going to talk about that. Also, the Genesis CEO has stepped down and 20% of staff is being laid off as a result of the crypto contagion. And also more updates on Celsius. So bad boy season. And also coming in the third hottest thing of the week. There's an exact date for the merge. We knew this last week.
Precise.
But somebody has got it down to the minute. So we're going to talk about that as well.
David, while we're talking about things, we should talk about our friends and sponsors at SmartCon. They wanted us to give the Bankless Nation a message, which is they are hosting a badass conference at the end of September, the 28th and 29th. Who's going to be attending SmartCon? What is this thing about?
SmartCon is Chainlink's annual conference. This is the first Chainlink SmartCon conference that is happening in real life. So there are some absolute chads in attendance. We've got Eric Schmidt, former CEO of Google. Sergey, of course, founder of Chainlink. Balaji, of course, we just had him on the show. SBF, we all know SBF. Ed from ARBITRUM, Donnie from Aave, Kane from Synthetics. So that is coming to New York at the end of September. There is a link in the show notes if you want to take a peek and get a ticket. Also, if you do get a ticket, make sure to use the code BANKLESS to get a healthy discount on that ticket price.
A substantial discount. Mm-hmm. This is numbering in the hundreds of dollars.
Yeah. Mm-hmm.
Yeah, so you definitely want to check that out. All right, David, let's check out some markets, man. What is Bitcoin telling us this week?
Bitcoin, slightly down, down 4.7%. Started the week at 24,500, ending the week where we are today at 23,400.
Okay, slightly down on the week. No clear signal above 20K. I'm not feeling good about Bitcoin unless it's above 30K. But how about ETH? What's that looking like?
Yeah, ETH down 2.2% on the week. Started the week at 1,900, currently clocking in at 1,860.
Are you surprised? I mean, we're going to get into all of the, like the OFAC stuff, arrested developer, censorship stuff in a bit more detail. But are you surprised that this action didn't hit ETH even harder? Like price just kind of shrugged it off.
Yeah, I guess that is a good point. That the tornado OFAC stuff was a big deal, and like it's been like now it's 2 weeks in a row that like crypto Twitter has been dominated by this Tornado Cash OFAC conversation. Am I surprised that it didn't hit ETH harder? Maybe. I guess so. I guess in a different state of the market, I would have expected that to hit the price a little bit more. But like it goes back to are we in a bear market? Are we in a bull market? Are we in a crab market? And like one of the big indications, the like actual solid indications of what kind of market you're in is what does news do to prices? And if bad news doesn't tank prices, you're in a bull market. If good news makes prices go up, you're in a bull market.
I agree.
Yeah.
And I do think back to the statement, I don't care if we say it every week on the roll-up, it's fine. Sentiment follows price. Sentiment follows price. And so I think if prices on ETH were down like 15% on the week, there'd probably be a different narrative spun out. That was all OFAC, all censorship. That's why ETH is down on the week. So because it's flat, that really wasn't part of the narrative this week. And I do think it's maybe an indication that we are not in a bear market.
It's also worth considering that like these 7-day price updates that we do every single roll up, like since we have what is basically 1 month on the screen, the 7 days is just that red square that I'm moving my cursor around right here. The trajectory, the trend is clearly up. And so if we went for 14 days, it would be green. So like the 7 day, the inside the 7 day of just down 2.2%, it's actually in like a monthly long uptrend and it's still fitting there.
True.
So
by the way, that's my cursor,
noise,
David.
Yeah.
That's not your cursor.
Well,
you can't see your cursor.
Yes, they can. I'm
Really?
the one who's recording my screen. Yeah,
No way, I didn't
You
know
can't
that.
see my cursor. Yeah.
Oh my God, I thought it was my cursor this entire time.
Well, no, I do capture your cursor. I also capture my cursor.
There's double cursors that
There's
people
two
are seeing on
cursors.
YouTube.
Yeah, and also mine's bigger. See, I just placed my cursor over your cursor, and you can't, and your cursor is gone.
Unbelievable. All this time, and now I find out. I guess I actually should have watched a roll up on YouTube to see that previously. Or on Spotify, by the way.
Yeah.
On Spotify, you can catch that. Coinbase. Sorry. CoinGecko.
Coin market cap. Yeah.
Yeah. What's the crypto market cap this week? We are where?
We are slightly down on the week. We ended last week at 1.2 trillion. We are at 1.17, so down $30 billion. Basically noise.
Above a trillion. Okay. This is a metric we've been paying closer attention to, and it's gotten a lot more interesting in the last few months. That is the ETH Bitcoin ratio. What is that like on the week?
Yeah, it is up on the week. It is up 2.4%, almost breaching 0.08. It broke 0.08 earlier this week. Fell back down, but now we are at 0.097957. So the ratio looking real good.
The trend on this has been up. We've got another graphic we'll show a little bit later when we talk about it. But let's talk about the bullishness that is the merge, because we can't not.
I'd love to
David,
talk about this.
We're like less than a month out, okay?
Right.
It's like less than 4 months. A month from now, 4 weeks. Yes. Let me not FUD the merge. 4 weeks from now, we will be in a post-merge world. And this is what that world will look like. Monetary issuance rates. If you compare fiat, the dollar, Ethereum proof of work, gold, and Bitcoin, and proof of stake, Ethereum proof of stake. I'm going to read these numbers from you. And this is from a Bloomberg report, actually, where they're increasing their coverage of Ethereum. It's getting me pretty bullish. So if you look at the fiat issuance rate from the 1970s until now, it's been about 12.8%, 12.9%. If you look at just the dollar, it's issued. This is different than inflation. This is issuance at 9.2%. Okay? Per year. These are all annualized numbers.
Yeah.
Ethereum has been, under proof of work, 4.2%. All right, so already significantly less than fiat, but gold is even better than that. They only mine about 1.8% gold from the ground, new gold issuance every single year since the 1970s. Silver, a little bit better than that, 1.4%. Bitcoin, better still. Of course, right now...
That number that they are showing on screen is post-2024 halvening. So they are jumping forward in future. So the current issuance rate is about 1.7%.
1.6, 1.7. Post
which makes Bitcoin
halvening,
on par with gold.
Basically, and that's currently. Now, if you want to project forward to the next halvening, that'll be cut in half again. So it'll be 0.8%, 0.9%, something like this. But Ethereum, under proof of stake, coming in 4 weeks from now at 0.18%. All right. And then if demand recovers,
with current fees,
issuance. And then that's with current fees. And if demand recovers to the fees that we were generating during the bull market or over the past year or so, it will be deflationary at negative 0.43%. Pretty stunning numbers here, David.
Yeah, we've been talking on previous roll-ups of like, man, Ryan, we might not be deflationary post-merge, But then if you look at this graph right here, and it's like, oh, we'll be 0.18% inflationary. It's like, oh, like
Who cares?
The difference between 0.18% inflationary versus negative 0.43% is like actually relatively small.
Dude,
it's
and
like
these
still
scales are
fundamentally bullish.
These scales for fiat and gold are like 50-year scales.
Right.
We're going to be like, this is when you're a monetary asset, you have to look in 50-year scales. There's another number that was on this graphic that I want to get you your weigh in on is if you actually look at Apple stock buyback, okay, that's a deflationary asset too at negative 3.7%.
Right.
And so some people, when I posted this, they said, well, actually, if you're saying Ether is a great store of value, you should actually be saying Apple is an even better store of value. And that's an interesting take. But the difference between Apple and Ether is Apple is not a monetary asset, all right? It's not used within the Apple economy. You can't pay anything with Apple dollars or Apple as a unit of exchange.
There is no reservation demand for Apple stock in financial, like, well, actually, okay, so you could collateralize your Apple stock if you're a billionaire, and you can like make that deal with Goldman Sachs.
Slight amount, that's it.
Right, but like other than that, like it's not like inside of permissionlessly global networks that have DeFi applications that are also permissionlessly built, right?
And it never will be because it doesn't have the credible neutrality because
Certainly.
Tim Cook and team can change the issuance policy at a whim, stop those buybacks, right? It doesn't have the credible neutrality, doesn't have the decentralization, is not used as a store of value, unit of exchange, and what's the other one? Medium of exchange and unit of account. It's not used as a money.
Right. And so like, but Ether actually gets like the best of both worlds. It gets the stock buyback mechanism of EIP 1559, which is the same mechanism that drove Apple stock to be like, quote unquote, deflationary. So it gets that, but it also gets the reservation demand of being like collateral money inside of DeFi. It gets to have both.
Yeah. I agree. Compare it to equities, compare it to monetary instruments. You kind of have to compare it to both. And in both, it's pretty favorable, I've got to say. Yeah. We are bullish on ETH, and so are you, David. Here's a tweet from you.
Yeah, so here's a nice metaphor that I was cooking up. And I say, think of the merge as a current, like an ocean current or like a river current. Swimming against the current, which is equivalent to swimming against proof of work issuance, is hard. If you are a swimmer and you are swimming upstream, you are swimming and you're probably not going very far. You're becoming a really good swimmer, but because you have to swim against the current, which is swimming against the structural sell pressure of proof of work miners, you're swimming against the current. Like you're a strong swimmer, but you're not going anywhere. And so I say Bitcoin and Ether have become strong swimmers in order to sustain their current prices. They're swimming against the current. They're developing their muscles, but they're not really going very far. They're not moving. But the merge kills the current because it kills the structural sell pressure of all of the proof of work miners. And so as Ether has become this like jacked swimmer swimming upstream, all of a sudden the stream stops being upstream and it actually starts being downstream. And so Ether goes from swimming against the current to swimming with the current. And so I continue in the tweet thread that I say, like, when Ethereum's network activity increases, EIP 1559 actually increases the speed of the current that is pushing Ether forward. And so like the speed of water that the swimmer is swimming in increases or decreases as a function of gas fees, as a function of EIP burning. And so the more network activity, the faster the current is that's pushing Ether forward after Ether's already developed all of these jacked muscles swimming really fast. And so like that's like the metaphor of the merge and Ether like supply economics right now.
What I love about David Hoffman metaphors is you could just close your eyes and just visualize them. So if that didn't stick with you the first time, close your eyes, rewind this podcast and listen to that again because
merge ASMR. Yeah.
That's what's happening. And the question, I think, is the merge priced in or not? We had an excellent episode with Hal Press, who's, I think, the best writer, the best thinker on this, the best investor on this. He literally bet his fund on the merge trade. He wrote a fantastic post in the Bankless newsletter that you should absolutely read. It's fairly long, but it is incredibly detailed. Send this to somebody with a tie, financial analysts as well. They'll enjoy this. And we did an episode with him earlier in the week that you can catch on the feed. But David, we've got to get the contrary take a little bit, okay? And the contrary take to all of this bullishness is, hey, ETH bulls, crypto bulls, Here's a tweet from Clark. You weren't playing any ETH merge. You were telling yourself a comfortable story while you longed the S&P. I think he is showing a correlation between Ethereum maybe and the S&P price on this chart. I'm not sure if that's what we're looking at here.
Going on. That's
what's going on here. So basically the tweeter is saying, hey, ETH bulls, like you're getting so excited, but look, NASDAQ's up. And we all know risk-on assets do really well when NASDAQ's up. And that's what you're actually trading. Cut out the ETH merge BS. This is actually just the NASDAQ and S&P. Stocks are up, so ETH goes up in a higher beta form.
And they're probably right to some degree. And, perhaps a decent degree. Like maybe it's actually greater than 50% of the effect. But we know with complete certainty, at least I'm completely certain, that it's not the full story. And we know that that is true because of the ETH BTC ratio has rocketed off the floor, going from where it was at like 0.05 to where it is now at 0.08. And so did Bitcoin follow the S&P 500? Perhaps yes. Did Ether follow the S&P 500? Perhaps yes. But Ether was like a 2x multiplier on what Bitcoin did. And so like only one of these things followed the S&P, and one of these things followed the S&P even more. And Ether did it even more. And my argument is like that's clearly because of the S&P or because of the merge.
I agree. We're looking at an ETH Bitcoin chart, and this is actually from an Arthur Hayes article where he's basically talking about how bullish he is on ETH, the asset and the merge and the trade. So we'll include a link to that in the show notes. He just published that this week. It's great article as well. And he's showing like this is ETH Bitcoin ratio, and you could see that line of the merge probability increasing, and ETH is just gaining strength on Bitcoin. Yeah. But also, interestingly enough, David, alt layer ones are not doing the same thing Ether is. Right. Okay, they are still not up relative to Ether. So that's another. You might say, well, of course, ETH is up relative to Bitcoin because it's more risk on, excuse me. But alt layer ones have not appreciated relative to Ether. So I think this really goes to the fact that people are pricing in the merge. That's kind of what we're seeing in the ETH price right now. At least all the evidence points towards that. David, got a lot more to talk about. What are we going to cover next?
Coming up next, are they arresting crypto developers? And is that the future of crypto? Because there's already one in jail. So we're going to talk about that arrest and why that happened and our speculation around that. And leading to the broader question, is Ethereum really censorship resistant? Like I'm pretty sure, Ryan, there's a bunch of listeners that don't pay attention to crypto Twitter. So like they kind of get it through this. And so we're going to speed run them through the 7-day conversation that was the Ethereum community on crypto Twitter about its relationship with censorship. Because a lot happened on that conversation in the last 7 days. So we're going to give that conversation to listeners. And also, of course, bad boys, what you gonna do? Three Arrows Capital is on the cover of New York Magazine, not in a good way. Alex Mashinsky took over trading of Celsius in the last days and really drove that thing into the ground in a grand fashion. And of course, the Genesis CEO steps down and lays off 20% of employees with it. So all of this spicy stuff and more coming right after we get through some of these fantastic sponsors that make the show possible. Lens Protocol is an open source tech stack for building decentralized social media applications. It is the new era for social media. We all have toxic relationships with our Web2 apps. We want to break up with them, but we can't. These applications own our digital lives and all the relationships that we've made. We need to break through to a new paradigm of social networking applications that we control rather than them controlling us. Lens isn't a social media app, it's a protocol to let 1,000 Web3 social apps bloom. Lens is a permissionless and transparent social graph that is owned by the user. In crypto, we say not your keys, not your crypto, and on Lens, we say not your keys, not your profile. With Lens, your followers go with you to whatever social media application you want to use. And instead of being trapped by an algorithm chosen by that app, Lens lets you choose the way you want to experience your social media. Lens is the last social media handle that you'll ever need to create. So in order to get started, there is a secret code word in the show notes. Enter that code word in the Google form linked, and you'll be well on your way to entering the world of Web3 social. ARBITRUM is an Ethereum Layer 2 scaling solution that is going to completely change how we use DeFi and NFTs. Some of the coolest new NFT collections have chosen ARBITRUM as their home, while DeFi protocols continue to see increased liquidity and usage. You can now bridge straight into ARBITRUM from more than 10 different exchanges, including Binance, FTX, Huobi, and Crypto.com. Once on Arbitrum, you'll enjoy fast transactions with cheap fees, allowing you to explore new frontiers of the crypto universe. New to Arbitrum, for a limited time, you can get Arbitrum NFTs designed by the famous artists Ratwell and Sugoi for joining the Arbitrum Odyssey. The Odyssey is an 8-week-long event where you complete on-chain activities and receive a free NFT as a reward. Find out more by visiting the Discord at discord.gg/Arbitrum. You can also bridge your assets to Arbitrum at bridge.arbitrum.io and access all of Arbitrum's apps at portal.arbitrum.one in order to experience DeFi and NFTs the way it was always meant to be: fast, cheap, secure, and friction-free. Arrest of suspected developer of Tornado Cash. No longer suspected. We do know that this is actually the Tornado Cash developer, and this is FIOD.nl, the website, which is a Netherlands website as to where, because that's where this individual, this developer, was arrested in Amsterdam. So on Wednesday, August 10th, the FIOD arrested a 29-year-old man in Amsterdam who was suspected of involvement in concealing criminal financial flows and facilitating money laundering through the mixing cryptocurrencies through the decentralized Ethereum mixing service Tornado Cash. FIOD is the Netherlands Investigation of Financial Services and Financial Crime Organization, and they arrested a Tornado Cash developer. Now, it's one thing to arrest open source developers. That would be egregious. We're not totally sure if that's what happened. And so there's speculation out there that not only was this person happened to be a Tornado Cash developer, but they were actually perhaps also assisting and aiding people in laundering money. But we don't actually know because FIOD released a statement that basically didn't give us any clarity. Ryan, what's your take on this?
Well, my take on this is, first of all, it seems very much like possibly they didn't have another reason for arresting this Tornado Cash developer rather than publishing the code. As David, you said, we're not certain of that. That is kind of the base case assumption. And if that's the case, a man was arrested for writing code that served as a public good for people to maintain their privacy online. That means they put a man in jail because people use his open source code. And I don't think, David, that can stand in any free society on earth. As you said, we still don't know if there were other reasons that this arrest was made, but I believe on the 16th, FIAT provided some sort of statement on this, but it wasn't really clear. This is Jake Chervinsky saying they refuse to say what charges are alleged, if any, so we still don't know if they think writing code is a crime. Does FIAT think writing code is a crime?
Two outcomes I see here is that there is an ongoing investigation that they don't want to show their cards for. And this is me trying to retain my grip of bullishness on humanity. As in there's a really good reason I'm trying here. Is that there's this guy aided and embedded money laundering of criminals and actually committed crimes. Versus they didn't say anything because they know that they just arrested this guy for building Tornado Cash, which is the outcome I do not want.
So it's possible that the first outcome, the still be bullish on humanity outcome, right, is still out there, right? And so we need to remain open to that possibility. But I will say a few other things happened congruent with this, which is they deactivated the Tornado Cash Discord.
Right.
Okay. They killed the GitHub repos of all devs. And these were centralized companies doing this, so you could argue this is kind of a chilling effect, but still the chilling effect is an effect, isn't it?
Right.
It's a legally defined term, as you explained last week on the Tornado Cash episode. And then this is the backdrop where OFAC actually banned not individuals, but they banned some smart contract code. So what does the weight of evidence point us towards for this arrest? It is very possible that they made an arrest of an open source developer who just published some open source code. Bad guys used it, and that's why they want to send him to prison. And if so, that is a big, big problem, I think. Not for, we'll get to these takes later, not necessarily for Ethereum, not necessarily for crypto, though it is a problem for the technology, more a problem for the countries and the citizens that live in those countries who are restricting their First Amendment freedoms. First Amendment, of course, is I guess that's a US only term, but freedom of speech, freedom to write and publish code. Some of these things are very important in any free democratic society, and these are the things that are in threat of being breached right now.
And without evidence that these FIOD arrested this developer because they actually committed explicit and real crimes, then I think as a community we have to assume that the man is innocent and didn't do anything. Until they tell us, then in my mind, this guy just got arrested for writing code.
So what are the legal experts telling us at Coin Center? This is a crypto lobby group that investigates this. And as lawyers on staff, what are they saying, David?
Yeah, so Coin Center released a very thorough and detailed statement analysis, legal analysis of the OFAC ruling of Tornado Cash being on the SDN list. So here's basically some excerpts from it that I think are important. They write, if the Tornado Cash application is not property in which some foreign country or national has an interest, then the Tornado Cash application cannot properly be added to the SDN list or blocked under the specific powers granted by Congress to the president in the IEEPA. IEEPA is what gives OFAC power. Someone should be able to challenge the designation as being made outside the bounds of the statute and therefore invalid. Basically saying OFAC... Coin Center saying like someone should be able to challenge this. There's like strong legal grounds for somebody challenging this. And Coin Center basically lays out the two big claims as to why somebody could challenge this. So claim one, OFAC's designation of certain autonomous contract addresses denies Americans their liberty and property without proper procedural due process. Yes, covered this. And claim two, an overbroad interpretation of the IEEPA substantially chills First Amendment protected speech. So those are the main core claims that Coin Center believes that there are legal precedents, there's legal ground for someone to take Coin Center someone to take OFAC to court. And Coin Center is not the only organization focused on freedom to release a statement like this. The EFF, the Electronic Frontier Foundation, which is an organization just dedicated to protecting the frontier, basically. And they put out a tweet that says, the EFF is deeply concerned that the U.S. Treasury Department has included an open source computer project, Tornado Cash, on its list of sanctioned individuals. Tornado Cash is an open source software project and website that published a decentralized cryptocurrency mixer. And then they go on in their tweet thread and also release an article backing this. And so now we have our lobby groups, our protection, our frontier protecting agencies, putting up a flag and saying, yo, OFAC, no, back off.
Yeah, and I so important to note that OFAC didn't arrest this developer. It was the group in the Netherlands, of course, but it's all part of the same thing, isn't it? This global kind of financial apparatus trying to enforce these quote unquote financial crimes. And is privacy one of those financial crimes? This is a great tweet from Alex, David. What are we looking at? Just if you want to get the scope of other notable money laundering scandals in perspective. And let it be known, of course, Tornado Cash was used by some bad guys for money laundering. I think you pegged the percentage at like 35%, according to analysts. So at least 35% of the funds inside of Tornado Cash was like North Korea and some other like bad actors, money launderers. But that wasn't the only use case. And let's compare it to other money laundering scandals in history. What are we looking at here, David?
Yeah, so we're looking at a graphic of just the previous biggest money laundering scandal. So coming in at number one at 390 billion, we have the 2010 Wachovia Wells Fargo case, which was allowed drug cartels from Mexico to launder almost $400 billion during 2004 to 2007. Damn. Coming in at number one. Coming in at number two, 265 billion. Standard Chartered British banking giant 2012 accused by New York Department of Financial Services of its failure to control money laundering, then helped the Iranian government to circumvent U.S. regulations to clear money to the tune of 265 billion. Damn. Donks Bank. Money laundering scandal arose in 2017 to 2018 when it became known that 200 billion euros of suspicious transactions flowed from Estonian, Russian, and Latvian sources through the Estonian bank branch of Denmark Bank, Danske Bank, from 2007 to 2015. 228 billion. Damn. And so, going to go back through those again. 390 billion from Wells Fargo. What happened was a $160 million fine. No arrests. The Standard Chartered, the number two, 265 billion. The bank paid a $842 million fine and disciplined 10 employees. I wonder what that means.
Severe discipline.
Coming in at 228 billion, the Danske Bank result, 10 employees were arrested. So 10 people went to jail. Okay, all right. No fine.
Maybe not to jail, just initially arrested.
Arrested, yeah.
We don't know what the outcomes were.
Coming in at number 4, 8 billion HSBC. The result was a $300 million fine, no arrests. Coming in at number 5, 11 billion Westpac Bank. Bank paid a $1.3 billion fine, no arrests. Tornado Cash coming in at number 6. Tornado Cash,
Possibly.
open source.
Question mark,
Yes.
right? We don't know.
At its highest point, it held $500 to $900 million, but while authorities linked some of these addresses to North Korean hacker groups, it's unclear how much of that total was used for illegal purposes. Ryan, earlier you said 35% was in Tornado Cash. That was in Tornado Cash at the moment of it getting added to the OFAC list. And that's after the Nomad Bridge heist, all of these other recent heists. When I was using Tornado Cash as for my own personal use cases, like in 2021, it was really before pre-sanction. Importantly, pre-sanction. It was really before all of the bridge heists that we've seen. And so, like, I bet you back in 2021, it was way below 35%. I bet you it was something down below 20%.
And the scope of this, we're talking like, look, $100 million to $300 million. All right? Mm-hmm. Look at these things.
Insane.
390 billion. Our friends Wells Fargo. In 2010 did this. Standard Charter, 265 billion with a B versus like 100 to 300 million dollars, right? And these are banks. These are banks doing this. So what, David, should we shut down the banks? Like just shut down banks?
I'm sorry, no bank has ever given me any privacy services. Like what have they done for me? Tornado Cash gave me privacy services. These banks didn't do shit for me, Ryan.
If the rationale is that smart contract code can be used by money launderers, we also know that banks can be used and are used by money launderers. And by the way, these are just the ones we've caught. Okay. So in that rationale, we're trying to sanction the smart contract code. Should we also sanction all banks? Right? Like this is not the way to handle the situation. It appears very egregious to me. But David, maybe we should talk about the conversation on Twitter. And that is part 2 of our story here, because there are a lot of implications. There's some backlash too, but there are a lot of implications of getting smart contract code on the OFAC list. What is the first implication here, and what are we looking at?
Yeah, this is going back to the chilling effect that has been created as a result of this OFAC SDN list of Tornado Cash. So Micah Zoltul, he put out a tweet saying, adding to the shame list, OpenSea, DYDX, and Microsoft, because Microsoft owns GitHub. And he says, all of these companies have gone beyond what the sanction laws required. They didn't just obey an unjust order, they went out of their way to do additional injustice. And so there's been this meme created about these, the over-complior. And so like, I'm over complying. Did you see the OFAC additions today? Modifies no to censor transactions. 7 hops from Tornado Cash, fire an AML report. There's all of these people in the ecosystem that are just like doing these things that was not requested of them, not related to the OFAC SDN list, and is censoring and prohibiting freedoms and users from doing the things that they want.
Well, it's true. Everyone on Ethereum with an ETH address is probably 2 or 3 hops, maybe 4 hops away from a Tornado Cash OFAC.
That was an analysis. Like the 90% of Ethereum addresses are 2 hops away from a Tornado Cash user.
90%.
And I mean, that's probably because of like the aggregation of centralized exchanges, but whatever.
Sure.
So some of the people doing this, Aave had a front end block. So Anthony Cesano, one of the recipients of to Sazzle.eth, a 0.1 ETH from the Tornado Cash like dusting that happened, he got blocked from the Aave front end. Aave has since then pulled back all of this front end blocking, but and
it was a third party that they used for the blocking, right? And they said we got to get more control over the third party, and it's just the UI, not the smart contracts. But still, even just the UI, I get it.
DYDX blocking Tornado Cash user. So if you've used Tornado Cash, you get blocked from DYDX. And these are things that like they are not required of them. And so this triggered a conversation on Twitter. It's like, yo, like, is Ethereum like going to just bend over backwards and become like the censorship chain? And this triggered a huge conversation inside of the Ethereum community.
Well, there was a back and forth that I had over the weekend with Antonio. And I want to make kind of like, because it's important not to get overly like purist about this as well, right? And so I tweeted out, and this is around the time of where I was starting to see UI blockages from the OSAC. It's time for DeFi to grow some backbone and fight back instead of just blocking ETH addresses. Unelected bureaucrats blacklisting citizens without cause or due process is unconstitutional, illegal, and incompatible with a free society. If it doesn't stop here, it just gets worse. And then Antonio, who is the founder of DYDX, so he was like, what am I supposed to do, Ryan? Like, are you saying you want me to go to jail? And if you're saying that, then why don't you spin up a front end of Tornado Cash? Like, why don't you put some stake in the game? And to be clear, that's really not what I'm saying, right? It's like, I replied to him, no, it's not time to go to jail. Let's be smart. But also, on the other hand, it's not time for DeFi, David, to sit down and die. And I really feel like this week has been a wake-up call for DeFi. We have to catch our breath. We have to organize. We have to develop some strategy around this, deploy some resources, and execute. I'm not saying now is the time to go to jail for like an organization like DYDX, but we have to find strategic legal ways to push back on this, to protest, and to move crypto and DeFi forward. And I think this has been a wake-up call for that.
Yeah, certainly. But it's actually gotten even worse. It has been a conversation of like this fork of Geth, which is facetiously being called OFAC Geth, which is a version of Geth that does not propagate transactions or validate blocks with sanctioned transactions. This is Stefan from Flashbots, who is actually going to come out on the podcast on Monday. But he's being facetious about this. I'm not saying he's actually like creating OFAC Geth. But the conversation, to bring up the conversation is that like there's this world where like we have these Ethereum clients that download a list of sanctioned Ethereum addresses and just like don't include transactions from those Ethereum addresses.
It's in the base layer software.
This is base layer software, which creates protocol level censorship, which in my mind is bad. But the point is, it triggered this conversation, which is really, it was a great conversation that the community had on crypto Twitter. And then so the next part of this conversation, I think, was really triggered by Lefteris. And Lefteris, can't pronounce his last name, sorry. He goes, question for Lido, Coinbase, Kraken, Staked US, and Bitcoin Suisse. These are all the biggest Ethereum stakers. And he asked them, if a regulator asks you to censor at the Ethereum protocol level with your validators, what would you do? Would you A, comply and censor at the protocol level, or B, shut down the staking service in order to preserve network integrity? And he's retweeting a tweet that talks about just like, if you add all of these stakers together, you get something like 80 or 90% of all stake. And so this conversation really triggered just the conversation that flowed. And so Eric Wall, a man with very sharp edges who's also very poignant, says, question for the Ethereum community. If a majority of stake chooses A in this poll, and this is the poll that Lefteris put, would you, 1x, consider the censorship an attack on Ethereum and burn their stake via social consensus, and we'll define what social consensus is, or Y, tolerate the censorship? And then he scrolls down and actually puts a poll. And so the poll is, X or Y. X, burn the stake. Y, accept the censorship. And coming in at 61%, we have the people chose X. 9% of people chose Y. So a very stark difference. And then 30% of people picked show results. And so really this is not really something that you can put into the protocol level that the Ethereum community will say, we will burn your stake if you censor. This is something that we need to communicate to each other as a community. It's like, these are our values, and we're going to make these values explicit.
Well, can you just walk through that for people? Because I'm not sure everyone understands the mechanism of how social, how a social fork could essentially burn people's stake and create a fork that is uncensored while the censored fork happens. Could you just walk through a scenario here? So let's say those stakers in Lefteris's tweet become evil. We call it evil. Coinbase, Kraken, all of them, and they decide
or just
to say,
some of them.
Yeah, and maybe it's not evil. They just say we have to comply with OFAC, and so we are now going to only validate blocks from every other block that is not on an OFAC sanction list. So essentially, they create an OFAC sanctionable Ethereum base layer, and because there's so much stake there. Essentially, a lot of blocks are not getting through. They kind of control it. So what happens in this scenario? What is Eric Wall actually teeing up? What does the Ethereum social layer 0 do about this?
Right. So the scenario here is that if all of those listed entities, Coinbase, Lido, Kraken, all the big stakers, all followed OFAC sanctions list and didn't propagate any blocks that included transactions that came from an OFAC sanctioned list, basically, if you are an OFAC sanctioned list address, your block, you only get like 5 out of 100 blocks that will be validated by a staker who's not following the OFAC sanctions list. So like 5 out of 100 blocks of your transactions only go through. So making Ethereum just really hard to use. And the Ethereum community, through this poll where like 61 to 9 say that we will not tolerate that and we will burn their stake via social consensus. What does that mean? In Ethereum, we have this concept called slashing. And slashing is this very objective event of you're a proof of stake validator with a stake bond, and you try to process an invalid block. You lie to the blockchain. You did some irregular thing, and that is completely objective. You publish 2 blocks, and they're conflicting, trying to fork the chain, basically doing something invalid, and you're trying to attack the chain. That's what we do with slashing that is objective and built into the protocol, and it's going to happen automatically. Then there's this thing called social slashing, which is something is going on with a validator. Maybe it's Coinbase, maybe it's Lido. They're censoring an address. Maybe they're censoring every single transaction. And so like imagine like all of these people, all of these 90% of stakers, Lido, Coinbase, Kraken, like the government comes and says, hey, we want you to shut down Ethereum. And since you're producing 90% of blocks, we want your blocks to be completely empty. And then if they had a gun to their head, they would probably choose to not die and only publish empty blocks. And that would be censoring 90% of blocks that would go through Ethereum, making the blockchain really, really just troublesome and useless. And so in the event that this happens, you can't actually slash that person at the protocol level because it's more subjective as to what is going on. As in, Coinbase is not processing transactions that interact with Uniswap. Like, they're still processing blocks, and the blocks are valid. They're just choosing to not include transactions that interact with Uniswap or interact with Tornado Cash or do something. And so how do we, as a community, get back our ability to use these DeFi apps? There's this thing called social slashing, or a user activated soft fork. And so what this means is that because we have this like unique property in Ethereum that Coinbase, Kraken, Lido, these blocks are being proposed by specific Ethereum addresses. So we know these specific Ethereum addresses are censoring transactions, and these specific Ethereum addresses have some amount of Ether staked with them. And so what we can do is we can fork the chain, and we can do something that punishes them. We can either freeze their stake. The most nuclear option is you can just delete their entire stake. That would be pretty damn nuclear. We probably wouldn't do that on the first iteration. The thing that we would probably do first is we would do what is called an inactivity leak. We would prevent them from being able to validate the chain, and they would be forced to withdraw their Ether staked from the network. And during that time, they are no longer able to process blocks. And then you could also slash them some arbitrary amount. We would have to decide this as a community. But I think the first step would be like, hey, we're just going to kick you out of the validator pool. We're not going to delete your Ether. We're going to inactivity leak you, which means you are losing as much Ether as you otherwise would be gaining if you were staking. So forcing you to exit and kicking you out of the validator pool, and only allowing validators who have not been censoring. And this is a social slashing event. This is a user activated soft fork. This is something that the community would have to coordinate around, saying, hey, OFAC made Coinbase and Lido and Kraken. They made them by the powers of the nation state, the monopoly on violence. They made them censor transactions. And we do not accept that in the base layer. And so we are going to coordinate around a fork. And when that fork does, is that kicks these validators out of the validating pool, and they must withdraw their ETH, or else it's just like in limbo if they don't. And so this is what's called a user-activated soft fork, and it's something that can only be done by social consensus of the Ethereum community, which is why this poll from Eric Wall is so important, because it's showing that a 61 to 9 ratio of Ethereum community members says that we will do this if our entities censor transactions.
Now, this is a Twitter poll, of course, right? It's like it's not necessarily reflective of everyone, of course. But like what David's describing is basically the end game scenario here. So a bunch of stakers, centralized stakers, decide that they are going to censor Ethereum via OFAC. Okay, the community says we're not running that software. We're continuing to run the original non-OFAC version of Geth. We'll fork you. This is the true Ethereum. And then they're trying to run an OFAC version or a censored version of Ethereum. And then it's forked. So you have ETH on both chains. You have every DeFi app that needs to select which one to spend their resources on. The community has to decide, a set of validators, which one to essentially run, which software to run. And it's a fork war. And may the best fork win. And I think, David, in every single case, what will happen is, as long as we have a social layer around Ethereum that says, look, censorship resistance is baked into the base layer of the Ethereum project. This is the true Ethereum. That the non-censorable version of Ethereum will win in the end. And the reason it will win, we know this from a game theory perspective, is why would China go deploy and trust the OFAC version of Ethereum that's completely US controlled? They're not going to. So the state will continue to collect to the non-censorable version of Ethereum, and the community will eventually win. This is what I mean. As long as you have a layer 0, a social layer that is upholding these values and willing to run the original version of Ethereum that is non-censored, we win. And this is what would happen. It would be a messy outcome. The cool news, I think, is if you're an ETH holder, you just get ETH on the OFAC version of the chain. Right. You could sell that if you want to.
Dump that because it doesn't align with your values.
Dump that. It doesn't align to your values if you want to, or you could keep it. You could do whatever you want. And then you could run validators on the real Ethereum chain that is uncensored. That's where you'll find me. You're going to find me on the non-censored Ethereum chain. I think a large portion of the community, you'll find them there too. By the way, this same mechanism plays out in Bitcoin, does it not?
Right. Yes, and this is a great history lesson. So we can move forward. But one of the reasons why I focus on this, this conversation on Tornado Cash happened on crypto Twitter. It's really important that this conversation happened because a lot of new people came into Ethereum in the last 12, 18, 24 months that are still learning concepts like this. And so we have to have these conversations out in the public where the Ethereum community defines hey, these are our values. No censorship at the base layer. And so this conversation continues. Eric Connor retweeted Eric Wall and says, I do agree with Eric. We should make it known as a community that we, stakers, will burn the stake of any entity. Burn at the stake any entity that tries to censor transactions, no matter the reason. These are the values that we're indoctrinating, we're instantiating into our layer 1. Now, going back to what you just said about the user-activated soft fork has been a mechanism that the crypto world has seen before. We've done this once before. And so Eric Wall put out this fantastic Twitter thread, which I'm going to read here. And he goes, as the Ethereum community gears up to prepare for its user-activated soft fork defenses to force any validator to think thrice before bending over to OFAC, there's going to be a lot of snark from Bitcoiners. And so we'll talk about the Bitcoiner relevancy here. It's envy. User-activated soft forking is the single most exciting thing that you can do in crypto. Bitcoiners had their user-activated soft fork moment in 2017, and it is their proudest moment. I am a Bitcoiner, and it is my proudest Bitcoin moment. The idea that Ethereum would be even close to achieving something similar is the most annoying thing that could ever happen. They'll never let you have it. The entire Bitcoin rhetoric relies on the reason that they were able to pull off their user-activated soft fork is because users ran full nodes. This is the basis for the entire design philosophy. It is true that the ability to run a full node is useful in a user-activated soft fork, but annoyingly, Ethereum can still pull it off, annoyingly to Bitcoiners. First off, Ethereum users can run nodes, despite what Bitcoiners will tell you. Even if the default is to sync using state commitments, that doesn't mean you can't enforce a user-activated soft fork. You, of course, can. Secondly, the outcome of a user-activated soft fork is much more of a market phenomenon anyways. You still win a user-activated soft fork just by demonstrating superior pricing power. So meaning that if you're not a person who doesn't know how to run a node or doesn't want to, you can still dump all of your OFAC ETH and buy all of your censorship resistance.
What's the true
ETH.
Ethereum? Is it ETH Classic?
It's the one that has a higher price. Yeah.
Right.
And so Eric Wall continues and goes, all of these things should be narrative violations for Bitcoiners. Ethereans should not be able to user-activated soft fork is a core Bitcoin thesis. And I'll say this, Bitcoiners are better at user-activating soft fork than Ethereans. They are, but they weren't born with that ability. They were taught that they had this power. What is that word, Ryan?
I have no idea.
I don't know.
I don't know.
Ethereans can be taught the same, basically saying that Bitcoiners don't have a monopoly on the concept of a user-activated soft fork. What most people don't know is that if Ethereum's master user-activated soft fork under proof of stake, they gain access to a weapon that is more powerful than the user-activated soft fork of Bitcoiners. This is because a user-activated soft fork in proof of stake can selectively punish censoring validators. I talked about this earlier. Bitcoin, you can't selectively punish a miner. In proof of work, if a majority of hash rate is censoring, you have to build more hash rate than the attacker, which is possible. It just is hard and takes time. The non-censoring miners also earn transaction fees that the censoring miners do not. I wanted to mention this earlier. If you have like OFAC Geth and you have 90% of blocks that are block stakers that are not processing OFAC non-compliant transactions, the remaining 10% of stakers actually make more money because they do get to process those transactions.
Right.
So you're actually rationally like incentivized to process the illicit transactions. If you can't overpower the attacker in proof of work, the only option is the nuclear one. You change the proof of work function and vaporize the entire billion-dollar mining industry in one shot. But you also kill the honest miners. In proof of stake, there is currently $25 billion of ETH securing the chain. If 10 billion of that is involved in censoring, you can surgically vaporize the bad part, and you keep the $15 billion of remaining honest stakers on your side.
And you vaporize it. You vaporize it on your fork, the non-censored fork, right? So it's like punitive actions, like, hey, you're going to pay for this, guys, because your fork's not going to be successful. Ours is, and on the successful Ethereum fork, you won't have any of your ETH. That is like the stick that social fork can yield.
It's brilliantly elegant because you reward the honest people and you punish the negative people. Now, Ryan, like I've always been curious about this, like because you and I could take our crypto Twitter conversations into this weekly rollup quite a lot. And I'm actually cognizant that I think maybe like 33% of listeners are actually on crypto Twitter. And so I've always been kind of curious, like, damn, like from the perspective of the listener, like, damn, Ryan and David are always concerned about like the Bitcoiners and like the Bitcoin maxis and like the tribes. I want to go to the quote tweets from Eric Wall's first tweet. And so this is the set of quote tweets, people that retweeted Eric Wall's tweet. And you're going to get two classes of people here. One is Ethereans retweeting this tweet saying, I vote X, I vote to slash. And the other is you have Bitcoiners trying to brigand the poll and saying, Bitcoiners, vote Y because it makes Ethereum look bad.
Can I just say, whenever you're saying Bitcoiners, I want to make sure that you are talking about like not everyone who owns Bitcoin, but a specific subset of Bitcoiner, which is a Bitcoin maximalist who wants all other chains to fail and only Bitcoin to succeed. That's what you're talking about when you're shorthanding Bitcoiners, when Eric Wall is doing that as well.
If you're not on crypto Twitter, you're not like exposed to these like tribes that are warring and these zero-sum games that are being played.
And we're overexposed.
We are overexposed to these people. So yeah, if you want to like scroll down, Ryan, and just see some of these conversations, because like if the quote tweets, the list of quote tweets, let's keep scrolling, just go through all of them. There's so many. The list of quote tweets, again, it's like, here's stats, sex, and snacks at it's time for Bitcoin. Imagine what it would feel like to know the integrity of your favorite shitcoin depends entirely on both stablecoin custodians and a status mole rat that lives in a $100 million LA mansion to do the right thing, even though it could sink them cry harder.
Who's the mole rat?
Like, I don't know. Like these Bitcoiners are insane, dude.
LA
these maxis
mansion.
are insane. And so like, again, like there's two types of quote tweeters here. People that are Etherean saying, I vote X. And then people that are Bitcoin maxis trying to like manipulate and attack the Ethereum community because of exactly what Eric Wall was saying. It's envy, he says. The user-activated software incorporates the most single exciting thing you can do in crypto, and Bitcoiners don't want Ethereans to have this power because right now it's the only thing that the Bitcoiners have. Maxis.
Yeah, I think that's what's going on. What are we looking at here, David?
This is just a meme. Like again, the Ethereum community is taking this opportunity to meme into existence. Like this is the press X to doubt meme, but it's press X to slash. And so the entire Ethereum community is like, yo, we will absolutely slash anyone who invalidates our values.
And look, so here's the thing. A lot of this is talk, conversation on Twitter, blah, blah, blah. I mean, at the end of the day, if this ever happened, by the way, this is set, I just want to emphasize, this is still incredibly remote. There's a conversation on crypto Twitter, but there is no talk of OFAC or like the Coinbases of the world or any of the validators running, sanctioned code or running censored code here and complying with OFAC sanctions. And OFAC is not even asking about. So this is just a remote probability that I feel like the crypto space went and ran with this week as a thought exercise, but it's a useful thought exercise, but it's still incredibly remote. And this is, by the way, we have the stick, but we also have like the kind of the carrot, I think, for people who are centralized staking providers. So Brian Armstrong actually replied to Lefteris's tweet when he asked, if regulators ask you to censor, do you comply and censor, or do you shut down your staking service if you're a Coinbase? Brian Armstrong, the CEO of Coinbase, says, it's a hypothetical, important to note, we hopefully won't actually face. But if we did, I pick option B. I would exit. Coinbase would stop staking. It would not censor transactions. It would not run the OFAC sanctioned validator code. It would
worth to note that the Coinbase staking is extremely profitable. They make a ton of money. And Brian is saying, instead of censoring the chain and compromising the integrity of Ethereum, we will shut down that business.
We won't do it. And what'll happen if they shut down, more people will have to kind of run their own nodes, obviously. So I think we've got a lot of defenses against this level of the state level of censorship resistance. And I think more defenses in a proof of stake world.
And it's definitely worth noting that these large entity stakers like Lido, Coinbase, etc., they're highly incentivized to not censor the chain because they don't want to piss off the community. Like they will punish you. We have that power. And so like the fact that this conversation is happening and the Ethereum community is planting a flag saying, hey, if you censor our transactions, we're going to kick you out. We'll fork you.
Yeah.
And so
we'll
like we'll burn your stake. And so they have to pick B because the community is forcing them to do that.
They have a fiduciary responsibility to pick B because they could get screwed. Imagine if they got slashed and they lost all of their depositors' money.
Right.
What are the costs of that? So even just the prospect of us being able to do this and this rhetoric on Twitter of like, you do this and we'll fork and we'll slash, that reins them in. They can't take the risk.
It's about having this user-activated soft fork as a threat without actually using it. The fact that it's an option keeps us from having us to use
mutually assured destruction, baby.
Exactly.
Do it.
Yeah.
Don't do it, though.
Please. Don't do it.
This will be fine. We don't have to fight.
This
There were some bad takes, though, I think on this takes. And love Ryan Selkis, previous guest on Bankless. Respect a lot of his ideas. He did not have the best take this week.
Nope.
But I think it's a summation of a lot of people who were saying like Bitcoin was looking great and Ethereum was looking very censored. What was his take here?
Yeah, Ryan Selkis says, Ethereum is amazing, but I don't get the sense most in the Ethereum have the stomach to to push full decentralization without compromises. USDC, of course, and OFAC imparting that. And then he follows up, Bitcoin remains metal AF. Both are important for the decades ahead, but let's be honest, ETH is FinTech 3, not Web 3.
Oof.
Absolutely terrible take, Ryan. Come on.
Love you, though. Love you, Ryan.
And so I follow up and I say, Tornado Cash is banned in the United States. Yet, Tornado Cash is up and running. Ethereum is fulfilling its promise on unstoppable applications, metal AF, like subtweeting Ryan Selkis here. And so like
you don't get points if you don't even have privacy at the base layer.
Right.
Okay.
And so like people are just obsessed with giving Bitcoin so much credit. It's like, well, you didn't see Bitcoin get banned. You don't get credit for not having any useful applications.
It did show up at the game. It's on the bench. Okay.
Like Bitcoin is just like this neutered app chain. Like you can only get like coin mixing at the centralized level, which has also been banned before.
Bitcoin, because besides transfers, Bitcoin uses basically its banking layer, its privacy layer doesn't have a privacy layer. But if you did want to use quote unquote privacy, it would be through centralized exchanges, which are fully OFAC compliant.
Yeah,
you're not in the game, guys. I love you. I love Bitcoin. Censored. It's really important, but you're not in the privacy game. That's why OFAC is not bothering you. Nation states aren't bothering you is because you don't have a Tornado Cash on chain. That does not make you Bitcoin stronger. Okay,
yeah,
that just makes them weaker. Not participating in the game that Ethereum's playing.
We're jumping around here, but here's a tweet of all these like annoying Bitcoiners that are on crypto Twitter that are extremely toxic. Eric Wall again says, Bitcoin maxis want you to fail. You haven't even started and they're already laughing their ass off. This doesn't even include all Bitcoiners though. I'm a Bitcoiner and I will help in far as I'm able. And he's put in 4 screenshots of just, the typical example of like a toxic Bitcoin maxi. And this is like Dr. Bitcoin MD, a famous crypto Bitcoiner on crypto Twitter, just like laughing at the possibility of a user-activated soft fork in Ethereum. Basically, there's like this cohort of Bitcoiners that want to see Ethereum fail, and they are they think that they are just like about to dance on Ethereum's grave right now because they don't think Ethereum has the guts.
From a base principles perspective, like, so for me, the value set, the base principle is freedom, it's decentralization, it's privacy, it's censorship resistance. Okay, and any chain, doesn't matter what it is, any chain that supports those base principles, I support. To the extent Bitcoin supports that, I'm a Bitcoiner. To the extent Ethereum supports that, I am an Ethereum. To the extent Solana supports that, or freaking Tron supports that in the future, or Cardano, I'm a Cardinian? Is this a Tronian? Solanian? I don't know.
Isn't that a spice?
But like, it's not about a specific tribe or a specific coin or a specific asset. It's about a specific set of ideals that we're protecting. Another take here, an equally bad take, I think. This is from Kevin O'Leary, another previous Bankless guest. We love you, Kevin. You've got a lot of great takes. This was not one of them. This is a hell no. Kevin O'Leary says, essentially, I'm glad the Tornado Cash developer was arrested. Now we get to move on. We get to be more regulated. I'll read some of the direct quotes. I think we're getting to that stage now, Kevin says. Maybe we're in the third or fourth inning towards that, but I'm tired of this crypto cowboy crap. He's talking about privacy here in Tornado. I want to get involved in a regulated place where we can bring billions of dollars to work. I want that too. I don't need to be a crypto cowboy, and I don't want to be one because I work in the regulated world. Okay, understand that, but this is the take that really gets me. At the end of the day, it's okay to arrest that guy, the Tornado Cash developer. Why? He's messing with the primal forces of regulation.
What do you think we're doing here, Kevin?
If we have to sacrifice him, that's okay, because we want to have some stability in that institutional capital. It is not okay to sacrifice an open source developer who is working on the public good. I know why I'm here, and it's not for that.
He says we are messing with the primal forces of regulation. That's why I'm here, Ryan. That's what I'm here to do.
Well, it's just there's different kind of cohorts and reasons for like, so we get some, like we get different tribes, crypto tribes, certainly warring it out. Well, we also get people who are just here for the money, and that's okay. But you got to rest on top of the base principles of why the social layer is here. Another bad take. But the question of all of this is, David, what can we do about this?
Right.
All right. So what is this JW Verrett person doing? Who is I believe he's a legal professor and a lawyer. What is he doing?
Writes very eloquently. He tweets out, I bite OFAC in the nose over their vague sanction of Tornado Cash. I applied to OFAC for a license in a way that would either obviate the harm that they did or give my nonprofit, the Crypto Freedom Lab, standing to sue them if they deny my license. I think he's basically saying I've put OFAC in a corner. Either answer that they give me opens back up Tornado Cash. And he wrote this very eloquent, like concise blog post about the choice rule that he's forced OFAC into, and basically saying like either way, like I'm taking like either they take option A and like Tornado Cash becomes freely accessible to everyone again, or option B, and then they give me grounds to sue them, and I will sue them. So we have this individual going after OFAC right now.
It's great. JW Verrett, we applaud you. They might OFAC might just take option C, which is don't reply to these things, which they often do. Yeah. But this is a
which
good
he
effort.
also stated that he will sue them for as well.
Nice. Good job. JW has all his bases covered. We applaud efforts like this. Also, Coin Center is doing some fantastic things. So just, three of what they're doing. First of all, they're seeking to engage OFAC. So let's not attribute to malice, which may just be incompetence. They may not know what a smart contract is. They may not know the importance of privacy. Let's make some space for that.
Press X to doubt.
Coin Center is going to help OFAC with some of these things, maybe. Second, there are some innocent Americans who have funds deposited in Tornado Cash, and they don't know whether they can take the funds out or not. My guess is probably not. None of this is legal advice. Don't know. But Coin Center is helping those citizens. And then finally, they said they're beginning to explore with counsel a court challenge to this action. Stay tuned. All right. So that's what our crypto lobbyist friends are doing. We applaud Coin Center for doing that. I think, David, there are a few long-term things we could work on. All right. The very first politician who comes out with a recognition and a need that we all have for a digital bill of rights, I am supportful of that platform. Because, David, we need a digital bill of rights that protects our privacy, that protects our cryptography, that gives us the right to own our own private keys, that gives us the right to run our own software, that recognizes that code is speech for all citizens. Some of these rights are implied in the Constitution with freedom of speech. I think it's now time as we transition to this digital era to make this more explicit. I would support laws on the books towards this. That needs to happen, but it's going to be a slow process. The other thing we can do, of course, is start to form prototypal crypto nation states, network states, as Balaji calls them. So imagine a crypto native country. This is a decades-long project. It'll take years to get to this. But imagine if we set up such a constitution for digital freedom, where we enshrined property rights in Ethereum and other smart contract chains. We made sort of code as law from financial perspective. We backed our currency by ETH and Bitcoin. We had a citizen level IDs that are maybe verified credentials or soul-bound NFTs. We use DeFi as our banking system. We use DAOs for capital formation. And that idea from Balaji's burned in my head of like, let's start to work on this project. We can eventually get UN recognition, maybe years down the road. Even if we fail, this could be a prototype that other countries look at and they're like, you guys had some good ideas here. Like maybe we should incorporate some of that because it's been successful. So that's another thing we can do. And then lastly, David, what is Gitcoin up to? And how can we help actually donate as individuals?
Well, there's plenty of privacy forward and also open source software freedom projects on Gitcoin. And so Gitcoin, and like 4 grant rounds a year, I believe, the next one coming up on September 7th, there is a $3 million matching fund, as in there's $3 million out there to be matched for other donations. So Ryan, you put out this bundle or this request for bundling of the top 3 to 10 projects fighting for free speech and privacy, and give them money, because you know what moves the needle the most? Money. So
you don't
weird,
say.
Right? Yeah. And so in the Gitcoin, there's going to be this privacy bundle, which you can just like donate to in net. And like all of your money will be matched by this $3 million matching fund. Coin Center, I'm sure, will be in there. There are other efforts as well. But money moves needles.
Save your money for September 7th. We're going to kick this off. We're going to promote it on Bankless. And we're going to fund where our values are in the future. Wow, that was a lot, but I think
it was a lot, but it was very significant. It was by far the most significant thing that happened.
Totally agree. All right, with that, let's move on to some other things, David.
And on to the bad boys of the crypto industry. Celsius owes $6.7 billion in crypto assets, and they only hold, Ryan, $3.8 billion of crypto assets. Ruh-roh, those are different numbers.
That's a delta there.
Yeah, there's a small delta there. I mean, this isn't anything new, but we're just getting more and more insight into the state of these Celsius books, and it is what you would call down bad.
It's a sorry state. Yeah. Did you know, David, Financial Times reported that Alex Mashinsky actually took control of Celsius trading right before the bankruptcy. So he was like, oh, things are going bad. I know what to do. I'll be the captain.
I'll
start trading. I'll fix this.
I'm pretty sure this is what's called revenge trading. And I know it's hate trading. Yeah. So it's like, I'll one last trade to get us out of the hole. And so we watched Celsius do this. They were like, instead of paying down their debt, they were just adding more and more collateral to their MakerDAO positions.
You got to take riskier and riskier bets to get yourself out of the hole.
Right. And that was Alex. That was Alex doing that.
Bad.
Nice job, Alex. Nice job, Alex. Just complete disservice to your entire company and customers. And also grifting off of the whole DeFi name. Just a grifter of the ages.
It's not, pretty crazy. And actually reminds me sort of the 3 Hours Capital story. They just kept doubling down and doubling down. And they made the cover of a magazine, the New York Magazine, but not in a good way.
Yeah. The title of this magazine is How 2 Wall Street Washouts with a Can't Lose Crypto Hedge Fund Vaporize $1 trillion. The crash of
Vaporized $1 trillion. Can you imagine?
Imagine having that associated with your name.
Are we at the point where we can laugh about this, David, a little bit? Like,
I've been laughing about this through and through. If you're gonna like bleed out your eyeballs about this thing, you're just not gonna make it in crypto. You gotta like see the silver lining of this.
Yes.
I guess. The cover of New Yorker for the podcast listener is kind of odd. It's like those 2 like Bitmoji type emojis for Suzu and Kyle. And then the actual article itself is like these just like actually kind of cool illustrations of them with like sparkles in their teeth. Yeah,
Good art.
I don't know what to make about that. In a small excerpt from the article, among crypto's smartest observers, there's a widely held view that Three Arrows Capital is meaningfully responsible for the larger crypto crash of 2022, as market chaos and forced selling sent Bitcoin and other digital assets plunging 70% or more, erasing more than $1 trillion in value.
I'd say that's true.
Yeah,
I
that's
agree with
about
that.
right. Yeah. Sam Bankman-Fried says that in the article, I suspect they might be 80% of the total original contagion. They weren't the only people who blew up, but they did it way bigger than anyone else, and they had way more trust than the ecosystem prior to that. Yeah, so like this article is basically claiming that $1 trillion of vaporized wealth was due to Three Arrows Capital contagion, which that sounds about right. Yeah.
I'm kind of done with it, David. Like, I know we want to like cover it in pieces, but like, I hope this is getting near to the end of talking about these guys. I saw Do Kwon did an interview last week. I don't even care. I'm not going to watch it. I just don't care anymore. Right? Like, let's move on as an industry. Learn what we can from these mistakes. It's going to happen
again. Is no one
again.
going to jail?
I don't know.
Is no one
Tornado
going to
Cash
jail?
Developers gone to jail? Potentially.
You're telling me Alex Mashinsky, who traded customers' funds outside of the scope of the product, not going to jail. Three Arrows Capital, who defrauded investors, not going to jail. Like, what? Who? Why isn't Do Kwon's not going? Why aren't people going to jail?
Because they didn't write free open source privacy software, David.
Jesus.
Where's the justice
Christ.
in the world? I don't know. Maybe in time it'll sort itself out. Not sure, but like, hey, it's back to layer zero. We got to protect these freedoms and hold people accountable in the right ways. Some more crypto contagion though. Genesis CEO. This is the largest like centralized crypto lending and borrowing OTC desk on the planet by far. The CEO just stepped down. He'd been working as CEO for like 7 years. And Genesis also cut staff by 20%. This was more Three Arrows Capital contagion. Just took, I guess, a couple of months for it to catch up with Genesis and for these headlines to break. I guess, more down bad.
All right, and that is the recap of that thus far. I hope that this is kind of like the last recap of this that we get until somebody gets charged with something that would actually be a turning of the page of this whole story.
Or I get my Celsius money back.
Or Ryan gets the Celsius money back. Coming up next in the weekly roll-up, of course, the exact merge time down to the second, although it's going to change. We have down to the second the current predicted merge time. And Taiwan using IPFS ahead of just trying to protect themselves from China cyber attacks. What is going on there? That's an interesting development. So we're going to get to all of these developments and more right after we hear from some of these fantastic sponsors that make the show possible. Rocket Pool is your friendly, decentralized Ethereum staking protocol. You can stake your ETH with Rocket Pool and get our ETH in return, allowing you to stake your ETH and use it in DeFi at the same time. You can get 4% on your ETH by staking it with Rocket Pool, but you can get even more by running a node. Rocket Pool is the only staking provider that allows anyone to permissionlessly join their network of validating nodes. Running a Rocket Pool node is easier to set up than running a solo node, and you only need 16 ETH to get started. Why would you do this? You get an extra 15% staking commission on the pooled ETH, so your APY is boosted. So if you're bullish ETH staking, you can increase your APY and get some extra tokens by adding your node to the decentralized Rocket Pool network, which currently has over 1,000 independent validators. It's yield farming, but with Ethereum nodes. You can get started at rocketpool.net and also join the Rocket Pool community in their Discord. You can find me hanging out there sometimes in the chat, so I'll see you there. JUNO is bringing crypto-friendly banking straight into your checking account. With JUNO, you can send money from your JUNO checking account straight onto a layer 2, like Polygon, Optimism, Arbitrum, and they have ZKSYNC and StarkNet support on their way. You can skip the ACH wait times, you can skip all the gas fees, and go straight from your checking account to an Ethereum layer 2 in seconds. Inside JUNO, you can buy and sell crypto with $0 fees, and your JUNO checking account comes with a metal MasterCard that gives you up to 5% cash back on your spending. JUNO is also giving you $10 cash back on your first crypto deposit and $100 when you set up a direct deposit. This ad just writes itself, so go sign up at juno.finance/bankless.
All right, guys, we are back talking about the projected exact time, a precise time that the merge will happen. This is Marius, a tweeter from Twitter, tweeting out. He's finally back from vacation, and he ran some computation to confirm the TTD date for mainnet.
And the projected date, according to the TTD, is September 14th at 10:57 Paris time. And what that translates into is about 4:57 Eastern time. The TTD is not actually a clock. It does not listen to the sun or go with the rotation of the earth. So as miner hash power goes up or down, this number moves forward or backward. But if we hold hash power constant, we are merging at September 14th at 4:57 p.m. Eastern time. That number's going to change.
That number's definitely going to change. I love the precision of this tweet and this estimate, but like it's coming, right? Like 14th, 15th, 16th, somewhere in that range. Probably more likely the 14th or the 15th, would you say?
Yeah. Yeah, I think I'm going to guess that this date moves up as in becomes earlier because I think miners will turn off. Right, like no one's investing more into hash power now.
Hash will go lower.
Hash will go lower. It will either stay exactly the same or go lower. Hash rate's not going to come online now. It's too late.
Ooh, what time do you hope it is? I hope it doesn't like happen on the 14th, like early in the wee hours of the morning. Although that'd be fine.
I would like to be awake for it. Yeah.
Yeah, because you want to just do a party. You want to just like there's some celebratory activity. It shouldn't be like early in the morning.
Yeah.
All right, merch party's on, guys. That's what that means.
Merch party's on, yeah.
There's also another airdrop this week. Actually, a pretty significant one, I think.
Yeah, this is a big deal. Yeah, the safe airdrop for the Gnosis safe. And so this happened. This is breaking as of, today, the time of recording. Gnosis Safe published an eligible wallet address list. 50 million tokens, about 5%, are available for airdrop claimers if you have a Gnosis Safe wallet that had a certain amount of ETH in it. So a little bit of a surprise. I don't think people saw a Gnosis Safe wallet token coming. So if you had a Gnosis multisig with more than 10 ETH in it, and it also made 2 transactions, you got the airdrop. Wrapped Ether or Ether are considered no other assets. And the minimum distributed was 400 tokens, although I don't know what the total supply is.
Go pick that airdrop up. We will include a link to the show notes where you can click on that, see if you're eligible or not. I guess they just raised money recently, so airdrop on the back of that, maybe.
I guess so.
And
why does a multisig need a token, Ryan? I'm confused.
Hey, you said everything that can be tokenized will be tokenized. I recall you saying that on the Bankless podcast, my friend. So
I did say that. I guess this one confuses me.
Well, it can be tokenized. So according to Hoffman's law, it will be tokenized.
I don't even agree with Hoffman's law anymore, but it's still working. It's still working as a law.
It hasn't yet been disproven, all right? So it's still a good thesis. OpenSea, what are they up to on the NFT world?
Yeah, so there's been this controversy with OpenSea's policy on stolen NFTs. So if an NFT was stolen by an exploiter or hacker, that hacker might go and then sell that, and then OpenSea would report that NFT as stolen and then freeze it. But the problem is a legitimate buyer would buy a stolen NFT, and then OpenSea would freeze that legitimate buyer's NFT, basically freezing them out of the liquidity of OpenSea. This caused a big consternation, big problem with the community because you had legitimate buyers coming to buy NFTs on OpenSea that were sold by thieves before OpenSea could flag these NFTs as stolen. So OpenSea is changing that policy. What's going on is that they are still freezing stolen NFTs, but if a police report is not filed within 7 days, then they are automatically lifting that freeze on that NFT. And basically this is a tactic to get around false reports. So people could grief other people and say that NFT is stolen, and then OpenSea would freeze it, and then the owner would be like, it wasn't stolen, that's my NFT. And so they're still freezing stolen NFTs, but they need to show the owner, previous owner or current owner needs to file a police report. And if they don't do that, then that lift is automatically released. And so it's not frozen.
I want to get in the headspace, get out of our crypto bubble for a minute and get in the headspace of enforcement agencies like the local police. Okay, right here. So think about this. You're a Bored Ape Yacht Club owner. You have an ape. You lost it because you did something real stupid with your private keys. Just left them out there and somebody took it. And you have to file a local police report. Yeah. So what's the police going to do? They're going to be like, what are you doing? Why did you do this?
Car going to come to your house and a police officer is going to write down notes?
If I was a cop on the beat, I would be incredibly annoyed.
Right.
Just at the prospect of NFTs even existing. Now I have to go hunt for stolen digital property online.
Right.
What am I supposed to do with this?
Right.
And the tie here is actually the OFAC sanctions, you notice, came on the back of North Korea hacking their own sidechain, right? FBI has to get involved. All of these smart contract hacks, The DeFi is basically saying to the FBI, hey, come help us sort this out. The FBI is probably like beyond annoyed. Like, no, how about you guys write your code better so it doesn't get hacked?
Don't
we
lose
don't
your
have to go
private
deal
keys.
with this.
Yeah. Mm-hmm.
And so what do? Right? The government responds and is like, we're going to sanction OFAC. I just think that this is like, these are all somewhat related. And if we get out of our crypto bubble once in a while and we put our, headspace in the minds of like enforcers, right? They're probably like pointing to crypto and be like, hey, I understand what you're saying about that whole OFAC thing, but also how about you get your stuff together and like, don't let North Korea hack millions of dollars worth of crypto.
Yeah, I think what we're really missing here is like virtual police. It's like our local law enforcement is not, they're here to settle like physical disputes. We need like virtual police to go after this. But digital police, but I don't even like that. I'd rather just us get our shit together. I think that's a better solution.
Same here.
Here's Sudoswap. Royalty-free Sudoswap is finding favor with NFT traders. Basically, this is a news report talking about the absolute fantastic volumes going through Sudoswap. So the Sudoswap is just like an NFT liquidity primitive. And it is doing some great volumes. So $10 million, I believe, in the last cumulative trading volume. So congrats to Sudoswap. Liquidity coming for NFTs. And we really need it because of what's about to happen next.
Well, what is about to happen next then? With this liquidity comes great responsibility and power, doesn't it?
Yeah, so I've talked about this before. We've talked about the concept, the category of collateralized NFTs, where you put up your NFT for collateral and borrow against it. We know DeFi loves to do collateralized stuff. It's like one of our biggest things. And so there's this application called BendDAO, which does this. It allows for collateralization of NFTs and allows you to borrow against it. And this Twitter account, Cirrus NFT, says there's currently 32,000 Ether, about $60 million worth of NFTs being used as collateral for loans on BendDAO. For the first time ever, a lot of these are at serious peril of liquidation. And he puts together a thread of the biggest risk to the NFT market that no one is talking about. A little bit hyperbolic. Basically, Bored Apes and Mutant Apes, these two NFT categories, are on the precipice of a cascading set of liquidations because this BendDAO puts collateralized apes or collateralized NFTs up for auction at like probably a discount, 5-10% discount to the floor price, hoping that somebody comes and scoops these up. A lot of them are collateralized. And so a lot of these are going to be put on the market. And there's just just like we saw that the 70% drawdown in crypto and like because of Aave liquidations and CeFi liquidations, we can see on chain that there is a cascading liquidations of Bored Apes and Mutant Apes ready to go because of this like NFT collateralization. Like, I'm sorry, Ryan, how many times did I talk about how this was going to happen on the weekly rollup over the last like 9 months? At least like 4 or 5 times I mentioned that this, like, as soon as we get NFT collateralization, we're going to have degens going along on their NFTs, and then they're going to get liquidated and lose their NFTs.
That's all right. That's efficient markets, man. So people who are risky lose their money, and that's okay. It's a pawn shop NFT. Everyone's going to be okay, I think.
Yeah. This is my truth. I say, like, we're too degenerate as a community to not trigger cascading liquidations on our NFTs. Since there's an update on this, that's about the first liquidation of one is about to happen. There is one Bored Ape number 533, which the floor price is about 72 Ether, but it's being sold for 68.4 Ether, which lowers the floor price, Ryan. And so, the floor price keeps on dropping, which could potentially liquidate more NFTs. So
hey, if you're looking for deals on NFTs, though, head over to the pawn shop. They're liquidating.
Yeah, liquidating the apes.
Give me a great deal.
Like the fact that it is the apes, I think is just like, of course.
Hey, there's some CryptoPunks in here, isn't there? There's got to be.
No,
it's all apes.
It's all apes.
Never mind. Mailchimp as well. So Bankless, of course, has a newsletter, and we use Substack right now. We're looking at transitioning to something else. But did you know, David, Mailchimp has created a crackdown on crypto newsletters, including the Edge. It's basically, if you have a crypto newsletter, they are not sending the emails out.
Yeah, so pretty crazy. Your crypto newsletter got rugged. Sorry, Missouri.
Again, I think they're back. I think they've resolved it somehow. I don't know, with Mailchimp or with someone else, but the hazards of centralized companies, if you're decentralized, if you're a crypto media publication like us, David, this is kind of a wake up call to us to make sure that we have redundancy here. Also a wake up call for Taiwan in the face of cyber attacks from China. They're actually looking to Ethereum's IPFS tech to help out. I don't know if this is a big way or what, or if this is sort of a small trial. But David, I think what this speaks to is interesting that nation states themselves will start to increasingly need to use decentralized technology like Ethereum, like IPFS, like, of course, cryptography, which they already use today, in order to defend themselves against other nation states. That is the reason at first the U.S., Mark Andreessen told us on the podcast, the U.S. did not want to adopt SSL. Did not want to allow cryptography technology in the browser, on the web, but they had to in order to protect all of their stuff from other nation state actors. So they just said yes to it. I think that is the destination for Ethereum, by the way, and why the OFAC sanctions will not hold up, because eventually they're going to need these decentralized asset money networks to protect against other nation states. And maybe we're seeing a whiff of that with Taiwan here.
Certainly, like cryptocurrency, cryptography, blockchains, these are technologies that supersede nation states. They are they're a dimension higher than nation states. And so when you are a minority, like nation state entity like Taiwan, it's advantageous for you to adopt these crypto protocols, these cryptography mechanisms, because cryptography supersedes nation states. So if you are a sub-dominant nation state, you use cryptography, you use IPFS, you use blockchain stuff to get out under the thumb of a larger nation state. And so the IPFS, for those that don't know, is the Interplanetary File System. It's a decentralized peer-to-peer network that lets users back up and store files and websites by hosting them across a network of nodes, eliminating central points of failure and circumventing censorship efforts. The storage and file referencing system for Ethereum is frequently compared, like IPFS is frequently compared to a file sharing protocol, kind of like BitTorrent. And I don't think there's any coincidence that the news of this IPFS upgrade of Taiwan, I don't know what it means. Like, I'm sure it's not just like universally like Taiwan.
No. I think IPFS. It's probably in a very small way.
Yeah. And also the important stuff, but comes right after Nancy Pelosi shows up in Taiwan and then China starts flexing its muscles. Like, that's no coincidence that this is happening.
Crypto is entering the geopolitical nation state level conversations here. Decentralized tech is. David, do you remember all the way back from 2017? Do you remember Dragonchain?
Yeah.
The Dragonchain Bros?
Yeah.
This is like Disney's version of Ethereum. I remember it was that way.
It was Disney they couldn't officially associate their brand with it, but for some reason it got like
wink,
like a wink associated with it. Yeah. Like ex-Disney people, and like it was one of these things that pumped to the absolute moon in 2017.
Those were back in the days where we had Asia had an Ethereum killer called Neo. Right. Disney had an Ethereum killer called like Dragonchain. It was all of these Ethereum killers.
Dragonchain.
Right now, so the news is not Dragonchain. It's kind of dead. But the SEC is filing suit against Dragonchain all the way back from 2017. So this is like 5 years coming, and now it's happening. Now, we can comment on that in and of itself, but just if you go to the price of Dragonchain, David, all-time highs for Dragonchain above $5, $5.50.
Yeah, it pumped from it started below a penny, and then it pumped to $5.50. It made a lot of people very, very rich.
You know what it's trading at now?
I'm guessing it's down bad.
It's down real bad, okay?
Real bad.
2 cents.
Oof.
$5.50 to 2 cents as a 99.9 something X drop.
That's a deletion of wealth right there.
Yeah. So you weren't into Dragonchain.
I was not. My friend was, but not me personally. Like, I just like Dragonchain. Like, I have the name itself. I was like, back when like names were important, I was like, Ethereum, Dragonchain, Ethereum. Ethereum name is way better, so I'm going to stick with like the serious name. It's worth noting that the SEC statute of limitations is 7 years. So if you issue an illegal security and the SEC doesn't come after you for 7 years, you're good. 5 years. They almost made it. But you're not out of the woods for 7 years, and Dragonchain got caught at 5 years.
Yeah, I guess it takes a long time to go through the process of this. It's another lesson for crypto where we think things happen fast. In other news, Ontario cracking down. What's this tweet from you, David? And tell us the news.
Yeah, there's new regulatory changes coming out of China for centralized exchanges. They are, if you're a cryptocurrency that is
David, you said China, but I think you meant Canada.
God. Well, I mean, that's
what's funny about
that's
it.
What's funny about
Freudian slip.
Right. Yeah, exactly.
Slip. Okay, so it's Canada. It's Ontario specifically, but Canada. Go ahead.
So all other crypto assets that are not Bitcoin, Ether, Litecoin, or Bitcoin Cash. These are the 4 cryptocurrencies that you can buy without any limits. All other cryptocurrencies in Ontario, there's a $30,000 limit a year that a individual retail investor can buy crypto. So that includes Solana. And I would say, as much crap as I give Solana, it is way better than Litecoin. It is so much better than Bitcoin Cash. There's no competition there. Litecoin, like this is living in 2017, and so like only there now are these like enshrined cryptos that are like, okay, you can buy as much as this. Like Bitcoin and Ether, good. Litecoin, Bitcoin Cash, absolute trash. But then all the other cryptocurrencies are like you're not allowed to touch them for more than $30,000 a year. This is very similar to accredited investor laws where the wealthier you are, the higher your limits are. But like, dude, what the F? What the F?
What are you doing in Ontario? What are you
what's
doing in
going
Canada?
on?
It's not all provinces, of course. It's Ontario, and this is kind of Ontario's version of the SEC doing this. And some people actually, when I tweeted this out too, they said, oh, these rules have been in effect for a while. They're just kind of now getting rolled out. So they were in effect starting last year. They're getting rolled out. The other like tweak on this is it's basically they're enforcing this at the central exchange level. So there are ways to circumvent it, which is like you could open up 9 different exchange accounts, I guess, and get $30,000 of Solana on each if you really want to.
You could also buy a ton of Ether. You could buy
and then convert it
and then send it to Uniswap and then have no limits there. So it's not a ban on like you buy in Uniswap, for example.
But it is the principle of the thing.
Dumb.
How regulator knows best.
Right.
These are the 4 crypto assets Ontario regulators have sanctioned you for: Bitcoin, ETH, Litecoin, and Bitcoin Cash. These are the safe ones, guys. And you can put as much as you want in them. I don't understand it. For people to know, I actually grew up in Ontario, so I'm Canadian and American. But I moved to the U.S. when I was kind of in middle school. That was a freaking tough move, by the way. Another story. I moved to another country in middle school.
I'll ask about it in your Layer Zero.
But now, like, I just feel like I have to look for where I live with like how crypto friendly is it? Yeah. Mm-hmm. How free do I want to be? And like this is like, if I ever wanted to move back to Ontario, I might be second guessing it if stuff like this is coming down the pipe. Right. So anyway, Canadians got to resist too. Yeah. We're working on it on the OFAC side, but there's lots of regulatory fights to fight.
Yep. Coming in next, we have the House passes the massive climate tax and health bill titled the Inflation Reduction Act, and is now being sent on its way to Biden to receive his signature, which he's totally expected to sign. $437 billion Inflation Reduction Act, 15% minimum tax on large corporations, 1% excise tax on share buybacks, tax credit for electric vehicles. There's $369 billion spending on climate and energy policies, and it also allocates $64 billion to extend Affordable Care Act program to reduce insurance costs. Interesting that there's all this extra stuff, which is like stuff that we hear about all the time, like, Affordable Care Act, green energy investment, but it's inside of this like Inflation Reduction Act. The name itself is like kind of like the Patriot Act, like Inflation Reduction Act, like you can't hate it. And also there's something completely oxymoronic about spending over hundreds and hundreds of billions of dollars in new spending to reduce inflation. Like you should be that's what creates inflation. Like you're spending more money.
To be fair, so a couple things. So one is, this was actually, I think the article we're looking at is from Friday. Biden did already sign it. So it's law now. It's done. Right. And there are obviously some tax pieces to this too, right? So they are raising some income, not just spending. They're doing a little both. But call me skeptical if this is actually going to do anything to reduce inflation. It's just not. I mean, the Fed has impact on inflation. This is just a micro drop in the bucket. Mm-hmm. Obviously, before November elections, which makes sense. Right. Nice bill to call it the Inflation Reduction Act. Not going to happen. Right. Not going to do much for it though. No. David, what's this? We're on the releases side of things. Galleon Portfolios. What are Galleon Portfolios? Yeah,
people, new listeners, people that came in the last few years, probably aren't familiar with this thing called token sets or set protocol. It was all of the rage back in the bear market 2018, 2019. But basically, people could create their sets of tokens, and like I created my set, other people created their set. Galleon is working, building on top of set protocol to make just like more, it's a little bit like index co-op. So Galleon Portfolios, there's 4 of them. You have like the Merge portfolio, the Fees portfolio, SPI, and it's just a collection of tokens in different ecosystems. So the Merge index, 50% wrap staked Ether, 20% liquidity providers like Lido, Rocket Pool, 30% DeFi primitives, Uni, Aave, SNX. You have the Spartan index ecosystem, SPI, which is SNX, Lyra, Thales. The VE token index for holders of Vote is all the VE tokens out there. So Curve, CFX, FXX, BAO, Butterfly. So it's just a new index machine out on the world, Galleon Portfolios. So cool, nice release.
There you go. On the raises side of things, we've got a16z. They just gave $350 million to Flow. This is Adam Neumann's company. A16z, this is one of the biggest checks they've ever written. Values Flow at $1 billion. Adam Neumann, of course, is the entrepreneur, in quotes, behind
Visionary.
WeWork.
Yeah.
Visionary, right? There have been many documentaries about him, some kind of scandalous, but A16Z is a believer. It's funny that like 3 or 4 months ago, David, Flow was actually a crypto carbon company.
No, that was Flow Carbon. That
was Flow Carbon. It's the same. It's the same kind of thing. It was Adam Neumann. Flow Carbon was the name. They shortened it to Flow, and now it's a completely different thing.
Yeah.
So I'm not sure. It'd be an interesting story to hear like what Adam and the team decided about the crypto carbon market, deciding it wasn't ready, and then the pivoting completely to real estate. But the other side of this is an absolutely colossal raise with a massive valuation. And Jason Calacanis has a take on this. What's his take, David?
Yeah, Jason Calacanis from the All In podcast, and he states, if a startup is worth $1 billion before it launches a product, it's probably a scam. I tried to do some research on what this product actually is. I actually couldn't figure it out. And that was actually a comment in one of the articles I read, is that we still haven't been able to figure out what this product actually is.
So that's the juxtaposition, because we also know that Mark Andreessen is like one of the best investors of his generation, and he's pretty savvy and pretty smart. And this is him giving justification for why they're doing $350 million in this thing. Interesting juxtaposition, I think. Not super crypto related, other than this used to be.
That's what people are hype, like trying to look into. The quote from one article that came from some investigative journalist said that Adam is building a next generation multifamily property management system with a proprietary payment system, adding that the system will include full financial services wallet, a tokenized reward program, and crypto payment method. What?
Yeah.
What?
Yeah, I don't know what that's about, David.
I don't know what that's about.
All right, Dragonfly, they're a crypto hedge fund. They bought another hedge fund called Metastable. Metastable was like a 2017, 2018. In fact, they were earlier than that to crypto. They bought them for $400 million, all their assets under management. Kind of some consolidation in the crypto hedge fund world. David, let's talk about jobs, though.
Let's do it.
We talked about raises, so we got to talk about jobs. A lot of hot crypto jobs going on. What do we remind folks every week, David?
That you should get a job in crypto, because the private markets have a ton of money, and these private markets are going into the jobs that you see here on the jobs boards. There is a ton of jobs in crypto. Ryan, read them off.
I gotcha. DYDX is hiring a software engineer on the back end. Stakefish wants an HR business partner.
It's not technical.
Stakefish also wants a back end full stack engineer and a front end software engineer and a DevOps engineer. Bankless, we need somebody for media operations.
It's non-technical.
Videos, that sort of thing. Software engineer for Boardroom Labs, a manager of crypto marketing at Manticore Games. We need a threader at Bankless. A Vertex Protocol needs a marketing coordinator.
Non-technical.
A financial analyst from Streams. Product manager for Bankless Academy. I could go on, but I don't need to, because you can get all of these jobs at the Bankless jobs board, bankless.pallet.com/jobs. Go check it out. David, what's coming next, man?
Questions from the nation. Every single week, we ask the nation what you want us to answer. So we got those questions coming up next. Does staking before the merge matter? And also, what comes next after the merge? And also, some hot takes from crypto Twitter. So, these fantastic questions and the hottest takes are coming up right after we talk to some of these fantastic sponsors that make the show possible. ZKSYNC is an Ethereum Layer 2 network that is pushing the frontier of high-performance blockchains that don't compromise on security or decentralization. ZKSYNC has combined the power of zero-knowledge rollups and the Ethereum virtual machine, enabling developers to build the greatest Web3 projects possible, ones we haven't even seen yet. Crypto needs its killer applications to onboard the world, but crypto killer apps need ZKSYNC as a platform to build on first. It's generally accepted that zero-knowledge rollups are the conclusion of crypto blockchain scaling technology, and ZKSYNC is leading the charge turbocharged into the final frontier of crypto economics. So if you're a developer who wants to build your app on a future-proof foundation, which gives your users the best UX possible, check out ZKSYNC's website at zksync.io. And yes, there's also going to be a token, so give them a follow on Twitter too, at ZKSync. The Brave browser is the user-first browser for the Web3 internet, with over 60 million monthly active users. And inside the Brave browser, you'll find the Brave Wallet, the secure multi-chain crypto wallet built right into the browser. Web3 is freedom from big tech and Wall Street, more control and better privacy, but there's a weak point in Web3, your crypto wallet. And most crypto wallets are browser extensions, which can easily be spoofed. But the Brave wallet is different. No extensions are required, which gives Brave browser an extra level of security versus other wallets. Brave Wallet is your secure passport for the possibilities of Web3, and supports multiple chains, including Ethereum and Solana. You can even buy crypto directly inside the wallet with Ramp. And of course, you can store, send, and swap your crypto assets, manage your NFTs, and connect to other wallets and DeFi apps. So whether you're new to crypto or you're a seasoned pro, it's time to ditch those risky extensions, and it's time to switch to the Brave Wallet. Download Brave at brave.com/bankless and click the wallet icon to get started.
All right, guys, we are back. Reminder, get into the questions. If you have a question for the weekly roll-up, you can reply to the tweet thread. Bankless HQ on Twitter tweets out every week and get your question answered. This is the first question from skiing.lens on Twitter. Is there a reason that ETH should be staked prior to the merge versus post-merge? Does staking post-merge carry any negative connotations, such as missing out on rewards versus possessing already staked ETH going into the merge? Should I stake now or should I wait until after the merge, David? What do you think?
I think that it does not matter. There's nothing really special about staking through the merge. Like, you get to say that you did it, and that's the biggest thing, is like, you get to say that you were there. Like, the financial ROI, like, you're going to get like 0.005% more ETH between like now and the merge, because like, you're just staking for such a little amount of time. I would say if you are not already staking your Ether, the risks might actually be higher because there might be some weird shenanigans with the merge. So I would say if you're not already staking your Ether, I would just say hold on to it and then stake post-merge and do that.
But this is my take too, and this is personally what like I'm doing, right? It's like, why stake now? Why not wait till after? Like a year ago when issuance when stake rewards were much higher, it was like something like 7%, something like that. Maybe there's some reason for it. It was never 7. It was like 6.
Oh, it did start off very
started off high when it was very low. Anyway, I could see that, but that's gone down. And for me, like, there's maybe some execution risk in there, but also like I wonder about forking. So if there is a POW ETH version, do you think they might disclude anyone who's staked from that? By
definition, you will not get the proof of work stake
again.
Chain.
I know you're not very bullish that there's going to be a high value POW chain, but that's another reason you get more of that forked token if you don't stake pre-merge. So I'm going to wait. I think that's the right call. What's our next question from Pete.eth? He says, or they say, what will be the next thing to look forward to post-merge? What do you think, David?
Yeah, I think the meta of conversation will shift into 4844. And this is going to be the thing that like cuts layer 2 transaction fees by like 1/100th. I think that'll be kind of the next thing that the general Ethereum community focuses on. And there's always something to focus on, but I will say it's also like the merge EIP 1559, like staking will be in the rearview mirror. We do have to like, at some point, like the Ethereum chain just like runs, guys. At some point, like there is no next thing.
Appreciate that for a little bit.
Yeah, we should just
bask
appreciate
in the glow.
That. Yeah. But it will be 4844 that we talk a lot about. Yeah.
So 4844, probably next year, probably sometime in 2023, hopefully. And this gives scalability to rollups. Makes rollups essentially free.
Yeah, basically.
I'm using hyperbole, but like close to free.
It's good hyperbole. I think after that, I would also say proposer builder separation, but that is in the very distant. That's like 2024 stuff.
Yeah, and by the way, rolled up into the next fork, which could happen in 2023, is also withdrawals. So if you stake, it's gonna be locked in there. That's good for price.
Stakers are like, you guys, I'm totally looking forward to withdrawals.
Yeah, I mean, I
would like to get my ETH back. Yeah,
yeah, exactly. And that's coming. That's right now. It's bundled in the same fork. They're gonna co-release those things, but that may not be the case. They could release them in separate forks too. All right, David, takes of the week. This one from Peter Van Valkenburg. He is a crypto lawyer at Coin Center.
He's the one that wrote the Coin Center report, and he says, I don't know who needs to hear this, but if the big regulatory battles are being fought about a different cryptocurrency, it's not because your preferred crypto is more decentralized, it's because governments aren't worried about the things it does and how it does them. And then, of course, with some nice context, Ryan Sean Adams says, I think I know who needs to hear this. Basically, this is subtweeting all the Bitcoiners who are like, ha ha ha, like Ethereum is being targeted by like regulatory and like nation state regulations. And then like Peter is saying, yeah, it's because like your Bitcoin, the government's not worried about Bitcoin. It's not a threat to them.
Let Bankless, let you and I, David, make a public commitment. Like, I just want people to hear this, right? Is Bankless is about freedom. It's about decentralization. It's about censorship resistance. Doesn't matter what chain.
Yeah.
All right. If Cardano needs to fight the fight around this,
right,
because they're being unfairly targeted. If Tron needs to fight the fight around this, if Solana needs to fight the fight around this, or Bitcoin needs to fight the fight around this, we show up.
We show up.
And I hope anyone in crypto shows up for these fights because we're all in this together. Right? It's like, I think the tribalism doesn't want us to believe that we're all in this together, but at the end of the day, we are. This is the crypto nation. We are all fighting for the same things, at least if we are preserving those basic essential rights. So I just want to say that publicly, in case that's not clear.
And I'll say that again. Like if you aren't on crypto Twitter, like in these like trench warfares with intertribal warfare, like I understand how like weird it is that me and Ryan are like, oh, these Bitcoiners. But like they are so annoying in my mentions of talking about like how Ethereum is like the centralized scam coin that's controlled by Vitalik's basement. Like it's just so exhausting.
It could be that Twitter algo tricking you though, that David and like put like, we're gonna screw with David today. Let's put all these things in.
No, the Bitcoiners are like, they target my tweets and they descend on them and they just harass me.
I know, there's some of that. This is another take. Do you want to read it?
Yeah, Ryan Sean Adams says, people gonna think twice about staking their ETH in a centralized exchange now. Thanks, OFAC, for promoting decentralization. What do you mean?
The meta take here is that this is getting us all thinking about decentralization and where the centralization vectors are. And I think it's super good for the space long term. So we're thinking about our front ends, right? Maybe more of these should be on IPFS. We're thinking about validating staking and what happens if major validators go rogue and promote something that's centralized. What does the Ethereum community do to react? We're game strategizing all of these potential outcomes. Super healthy. I'm pretty excited. So this is the beauty of crypto, I think, is anytime you get kind of like censorship or massive crackdown, like it's just like kind of the water balloon. It just kind of squeezes through the like authoritarian fingers and like manifests somewhere else. And so I think this is what progress looks like, is the bottom line. What I would say, it's actually a good thing. Yep. Is that weird to say? I mean, people are like, rose-colored glasses. How are you saying that this OFAC sanction thing is a good thing? But in a way, it is.
Right. It's Ethereum, crypto. These are organic systems. These are anti-fragile systems, and the community is the antibodies. And when the community gets faced with a stressor, we respond, and we make it things. When something comes to attack Ethereum, we fix it and make it more decentralized. So if there was a weakness, we solve it. And it only happens when there is stress. Like animals, organisms, they respond to stress. Ethereum is being stressed by this OFAC sanctions thing, and we are responding to it by making us stronger.
Yep. We're just routing around. Yep. David, what are you bullish on this week?
Ryan, this one's going to be atypical for me. I am bullish on mountains. I'm turning off Twitter. I'm deleting Twitter.
Is this nature?
I'm going into the mountains. I'm not disconnecting from cell service. You can't get cell service out there. Gonna hang out with 4 of my homies and only think about trees. You're
gonna release all of the digital toxins from your body.
Yes.
That's what's gonna happen.
Yes. This is my first non-crypto trip since like 2019.
Oh, dude. You did a long time coming then.
Yeah.
Enjoy it. Enjoy the grass.
I will.
Enjoy being outside.
Yeah. I'm gonna sit in grass for hours.
Yeah. I'll keep everyone at bay on Twitter for you. All right.
Yeah. Thank you.
All the maximalists.
Thank you.
That'll be on me this weekend.
I'm bullish on zero cell reception. Ryan, what are you bullish on?
I am bullish on layer 0, my friend. So what is layer 0? That is the people underlying all of the guarantees, all of the security that we have in crypto. You have a podcast called Layer 0, all about the people in crypto, because ultimately this is our only defense, our best defense against everything that comes at this industry. And people don't realize this, whether it's Bitcoin, whether it's Ethereum, whether it's Solana, is the thing that enforces all of the immutability and censorship resistance and anything else that makes a blockchain goes back to the layer 0, right? And that's what we've been talking about, right? So it's like, if enough people believe in censorship resistance for Ethereum as a core value and a core property that the project needs to have, they will run the software that makes that possibility a reality. So it all comes back to the people. If the people stop believing this, then we lose and we don't get the censorship resistance. This is why I think movements like Bankless are so important, is because we are working on that layer 0. And the tech can be great, but if you don't have the layer 0 to support it, to run the software, to say no in the face of censorship, and to say yes for immutability, you don't really have a blockchain.
Right.
And I was bullish this week, I guess, is back to bullish on what I saw in Ethereum, and the X movement of like, I vote to fork out any censorship resistance and run a different chain, sell my assets on the censored chain, burn the stake if I need to, and preserve censorship resistance. I'm very bullish on that, David.
Yeah, and it's the community that supports the blockchain that makes the blockchain, right? And like I said earlier, so many new people came into this cryptocurrency industry in the last 18 months, and they probably haven't been exposed to these very tough questions, because some people didn't even think about, people are learning about what this means right now. And we need to have these conversations every 2 years, because new people come in and they haven't had one of these conversations yet.
Totally.
And so we just have to keep on rehashing and reinstilling what our values are on a regular basis, because otherwise we'll lose them.
It's like 2022 has been the year of learning lessons, right? We learned the hazards of centralization in centralized lending providers with Celsius and in BlockFi and others. We learned the hazards of massive speculation on margin through through Three Arrows Capital, and others like them. Now we're learning the value of censorship resistance. This has been a fantastic year for teaching us lessons.
Bear market. This is why bear markets are so awesome.
I love them.
I love bear markets.
Meme of the week, David. This is hilarious. What are we looking at, man?
We are looking at VITALIK's new album, which drops September 15th, called The Merge. And so this is not actually his album, but for the podcast listeners, this is a very dark looking rap album with VITALIK and this shadowy look, just staring right into your soul.
Parental advisory, explicit content.
Yeah, the Merge. It drops September 15th.
That's awesome. That's it from us. We got a moment of Zen for you, but before we do, we got to tell you, none of this has been financial advice. It never is. On Bankless, you could definitely lose what you put in, but we are headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.
Hey, we hope you enjoyed the video. If you did, head over to Bankless HQ right now to develop your crypto investing skills and learn how to free yourself from banks and gain your financial independence. We recommend joining our daily newsletter, podcast, and community as a Bankless Premium subscriber to get the most out of your Bankless experience. You'll get access to our market analysis, our alpha leaks, and exclusive content, and even the Bankless token for airdrops, raffles, and unlocks. If you're interested in crypto, the Bankless community is where you want to be. Click the link in the description to become a Bankless Premium subscriber today. Also, don't forget to subscribe to the channel for in-depth interviews with industry leaders, Ask Me Anythings, and weekly roll-ups where we summarize the week in crypto and other fantastic content. Thanks everyone for watching and being on the journey as we build out the Bankless Nation.